He's going to see Barnier. Clearly, Brexit is a conversation that we're all trying to understand at the moment. The Bank of England, though, has got a number of different things that it's thinking about right now. It's trying to think about the impact that Brexit is having on sterling. It's trying to think about the inflationary outlook, whether or not there's a second-round effect, whether or not the consumer is spending too much money and gearing up too much. The expectations for a bank rate hike have risen quite dramatically, and Andy Haldane was probably the prime driver of that. Yeah. Do you think the Bank of England raises interest rates anytime soon?
We actually don't, and I know it's a close call, but we actually think they don't. And obviously, the voting last time, 5-3 again, suggested that it's a very much a live discussion happening at the MPC. We think the bank is looking through. So they've got this inflation mandate that we're all aware of. We think they look through that because we do think there's going to be a much softer growth trajectory second half of this year and even into 2018 as you get a real income squeeze on consumers, right? So that inflation rate, I think now just below 3%, is really putting pressure. We're not seeing wages pick up, even though the labour market is in actually relatively good shape. The savings ratio, great to see the chart there. Look, that's at an all-time low. So we're getting people spending their savings to try and maintain their living standards now. That can't go on forever, clearly. So we get some weakness in the consumer. And as I said, the bank looks through this spike in inflation, which of course is because of the devaluation in sterling, and actually holds firm. They don't need to move rates.
Do you think the wage growth actually follows here, Andrew? I mean, we got, for example, from the Fed minutes in the U.S., we see that companies are holding back on spending because of the uncertainty for government policy. Clearly, in Britain, that's got to be the case as well. Businesses holding back spending because of the uncertainty caused by Brexit, probably holding back on raises as well for the same reason. Does that kind of loosen up a little bit and businesses start letting go a little more cash?
Well, I think it's going to be tough in the UK because I think the outlook is still really soft, and we saw that, earlier this week. We looked at some of the investment numbers in the auto sector. They're running at sort of 40% of what it was last year. So I think the investment picture looks really soft. And as long as there's that uncertainty around the economic growth story here in the UK, I think companies are going to be very reluctant to push for higher wages. Now, it's not just a UK phenomenon. We're even seeing it in the US, right, where the labour market is tight. We're still not seeing wage rates move up as much as you would think. But I think it's particularly acute here. And so I think those downward sort of pressures on wages are likely to remain. And as I mentioned before, with inflation moving up, it puts a real squeeze on household incomes. And I think that's what the bank will be looking at.